April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again.
Now, the new Canadian Prime Minister, Mark Carney, is speaking about President Trump's tariffs. Listen to what he just said.
April 2nd, 2025 will go down in history as the day when Canada's energy strategy permanently changed the geopolitics of the global commodity world. It is the date when oil officially began to flow through the expanded Trans Mountain Pipeline, a project that Canada had fought for over 10 years. The flow of crude began after numerous legal battles, protests, and multi-billion-dollar overruns. But the real sensation didn't come with the first liter of oil. It came immediately afterward. Donald Trump, on the eve of his return to the White House, announced the introduction of a 10% tariff on Canadian oil and gas. Washington decided to play hard. But Canada was ready. While American refiners were holding their heads in dismay, China stepped into the game. One of China's largest petrochemical conglomerates, Rangsheng Prochemical, swiftly opened an office in downtown Calgary and signed a contract with Canadian energy giant Suncor Energy. As early as June 2025, the first shipments of heavy oil are set to depart from the Burnaby terminal to the port of Zhoushan. This agreement is not just a commercial move, it marks the start of a global energy pivot. Behind the contract with Suncor is none other than Wang Jia, former head of PetroChina's Canadian division. With his arrival, Rangsheng is building a new supply chain in Canada, planning to occupy up to 10% of TMX's capacity by 2026. The company is acting strategically. Deals are made under FOB terms, allowing the Chinese side to control logistics and resell crude to India or Japan when prices rise. Analysts have calculated that through arbitrage alone, such schemes could bring Rangsheng up to $3 in profit per barrel. The Trans Mountain expansion has become a symbol of Canada's new direction. The project increased capacity to 890,000 barrels per day. That's more than 50 Olympic swimming pools of oil daily. Now, this flow is no longer aimed at American refineries, but toward the Pacific region, where heavy sour crude from Canada's oil sands is highly valued for its refinability. According to the International Energy Agency, for decades, nearly 99% of Canada's exported oil went to the United States. Due to bottlenecks and dependence on American infrastructure, Canadian producers were losing up to $15 per barrel. TMX is rewriting those rules. Already in August 2024, the first tankers carrying Canadian oil arrived at refineries in South Korea. Ottawa hopes the new route will bring the economy $20 billion annually. However, environmentalists and Indigenous communities are raising alarms. A potential spill could become a disaster for the coast of British Columbia. In response, the government has created a $1.5 billion fund for emergency response and cleanup. Trump's tariff threat became the catalyst for Canada's diversification. In 2023, energy exports to the United States totaled 200 billion Canadian dollars, and the introduction of a 10% duty could cost oil producers up to $10 billion annually. At the same time, American refineries that process up to 3.9 million barrels of Canadian oil per day will face a supply shortage. Goldman Sachs warns U.S. gasoline prices could jump by 80 cents per gallon, an unacceptable scenario in an election year. That was the moment Ottawa announced the launch of the Global Market Accelerator, a $6.5 billion program, with $5 billion allocated for promoting energy resources in Asia and another $1 billion in support of farmers affected by trade disputes with the United States. The agreement between Suncor and Rangsheng was signed just a few weeks later. Gas is also on the way. Canada's largest ever project, LNG Canada, with a value of $40 billion, will begin exports to Asia by the end of 2025. But the energy maneuver doesn't end there. Conservative leader Pierre Poilievre has proposed reviving the Energy East pipeline project to supply oil to eastern Canada and Europe. Liberals, on the other hand, are looking north, aiming to chart new LNG supply routes to Germany through the Arctic. Amid this pivot to Asia, the United States is losing its monopoly on Canadian oil. Already in 2024, China increased its purchases of Canadian oil to 184,000 barrels per day, a 22% increase from the previous year. American refineries now find themselves at risk, potentially forced to seek more expensive alternatives from Saudi Arabia or Venezuela. Analysts at Wood Mackenzie forecast cost increases of up to $10 per barrel. But while tensions between Ottawa and Beijing over Huawei and canola persist, oil remains untouched by sanctions. It is simply too important. Alberta Premier Danielle Smith, in her speech in the fall of 2024, called the current shift Canada's energy sovereignty. The export revenue forecast by 2035 is a staggering $500 billion. But oil is not the only trump card. By December 2025, liquefied natural gas from Canada's coast will be shipped to Asia. LNG Canada will deliver its first 2 million tons. Chinese company ProChina holds a 15% stake in the project. By 2027, new routes through the Atlantic and Arctic will give Canada access to Europe's post-Russian gas market. While the United States is still receiving 100% of Canadian gas, 8.6 billion cubic meters per day, that share is set to decline. In addition, Hydro-Quebec and Ontario Power Generation are already exporting 42 terawatt-hours of hydropower to the United States annually, enough to power 4 million homes. That's $2 billion in net revenue. Canada is preparing for a complete energy transformation, not just as a raw material appendage of the United States, but as a global player capable of setting terms in both the East and the West. The awakening of the Canadian energy giant is in full swing. TMX is pumping oil, LNG is at the starting line, and China is buying more and more. The only question is, will the United States manage to adapt, or is it already losing its most reliable supplier for good? Do you believe this pivot will truly shift the global energy balance? Will the U.S. be able to regain influence, or does the energy future of North America now belong to Ottawa and Beijing?